Awesome. Welcome to RMI's quarterly live one-on-one question and answer. We're just going to give it a couple minutes to allow a couple people to join in here, but shortly we will be starting. And for those that don't know me, I'm Irfanali Moledina, managing partner at RMI, and today I'm joined with a special guest.
I'm Naurin Moledina, and I'm the U.S. tax partner at RMI.
Awesome. So we're just going to give it a couple more minutes here. As a couple more people will be joining us shortly, and then we'll begin as some questions with any questions that you might have. We have got a list of questions as well that came in earlier, so I'll be talking about some of those. And for those that missed our quarterly newsletter, we did announce in there today's why I'm joined with Naurin is because we are doing a bit more of a focus on U.S. taxation today. And so you'll see some of the questions that will come in will be around U.S. taxation, but of course, we're welcome to any questions. Try to keep them accounting related, but even if not, you can even ask us whatever you feel like. We're here for the next half an hour. So thanks. First questions have started coming in. What does resident and non-resident mean in terms of U.S. taxation? So Naurin, you want to tackle this one?
Absolutely. So what does resident and non-resident mean in terms of U.S. taxes? So we have tax residencies that we discuss and deal with when it comes to taxation. And that being said, we have residents are considered those that are part of United States of America and reside in United States for the most part of the year. Non-residents are those individuals who are citizens and green card holders of the United States, however, reside outside of the country for the most part of the year.
Awesome, thank you. So I see more people are joining, which is fantastic to see. Once again, this is RMI's live quarterly one-on-one question and answer. I guess today it's one-on-two since there's two of us here. But we are focused on any questions you might have accounting related. As questions come in, we'll for sure feel free to, we'll be answering them as they come in. I'm a U.S. citizen living in Canada with no U.S. income. Do I still need to file a tax return in the U.S.? Go for it.
So the answer for that is if you are a U.S. citizen residing in Canada, you would still be required to file your American tax returns, as the United States of America taxes their citizens or green card holders based on their citizenship and not residency. So as such, irrelevant of whether you have any U.S. income or not, you would still be required to perform a U.S. tax return filing.
Yeah, our friends to the south are one of only two countries in the world actually that require citizens to file taxes versus residency. It's them and a very small country in Africa. So it's if you are a U.S. citizen, there are a lot of benefits, of course, but one of the disadvantages and one of the things you do need to take care of is making sure you are filing on an annual basis. So I guess along those lines, what are the consequences of not filing their U.S. returns?
So if we don't choose to file our U.S. returns in the United States, the consequences may lead up to a penalty of up to $10,000 per year of the tax returns that have not been filed. So quite hefty penalties may result from not filing the U.S. returns.
Thank you for that, Naurin. And for those of you that don't follow the news as much, you'll see in Canada and the U.S. what's happening right now is there's lots and lots of changes coming down the tax pipeline. And part of it is just a little bit of instability in the governments with in Canada, for example, we see the Liberals that are struggling to maintain their support, and so they're trying to bring in new rules, and they did back in the day as well, and same things happening in the States between the current Democratic government and the Republicans, and because there's such a political divide, there's lots of tax changes that keep happening, and so it's really important to stay up to date, stay on top of your stuff, because at any given time, we don't know if the U.S. is actually going to start to crack down on non-resident citizens that aren't filing returns. I know this was a big thing a few years back that they were going after corporations that should have been filing in the States that weren't, and taxing them on income that's outside of the country. And you never know, they could start going after non-resident citizens because there is a requirement to file taxes. And for the most part, depending on how your income structure is, a lot of times you may not end up getting taxed at all on the filings. You just have to make sure you're reporting your income. And it kind of leads into the next question here, is what is the US-Canada income tax treaty good for? And ultimately, the tax treaty allows or helps prevent double taxation for the most part. So if you are living in Canada and you're a US citizen and you've got a job and you're an employee somewhere, you're paying taxes, what happens is you get those taxes as a tax credit in the States. And when you use those tax credits, they pretty much offset any balance you might owe. Now, it's not 100% across the board. There are some specific nuances. For example, if you have a TFSA in Canada and you're a US citizen, Canada doesn't tax you on that, but the US will, because they don't recognize that as a tax-free savings account. So you just got to be careful of little nuances like that that do happen. So it's always, if you're a US citizen, always recommend talk to a good accountant first, and make sure you are making sure you're covering your behind, so then this way you don't have to worry about being in a position where you do get double taxed. Another question came in there: if I sell cryptocurrency in the US and Canada, how do I report that in the US? So cryptocurrency is a very fun one, and the tax treatment between Canada and the US is similar in some ways, but where we got to be careful is if you are a US, if you are a Canadian living in Canada, you'll follow the Canadian rules. Where it gets a bit more complicated is if you are Canadian, let's say you're a Canadian resident but a US citizen, then what happens is you got to report in both countries, of course. In Canada, you're going to be treating that either as business income, or what's going to happen is if it's not business income, we might treat it as investment income. And what happens is it really depends on or whether you're holding these long-term or doing a lot of active trading. And a similar structure will happen in the States. The one biggest difference I would say is in the States, there's short-term capital gains and long-term capital gains. And so it can be an investment vehicle that you are trading on a short-term basis, where that gets taxed differently compared to if you're holding a cryptocurrency for an extended period of time. And for sure, I'd highly recommend checking out our last one-on-one session, because we did do a lot of Q&A on cryptocurrency. So I go into more specifics about how that gets taxed and the rules around that. So lots of questions coming in now, so we're going to get caught up here a little bit. But Naurin, why don't you tell us, there's a question: I forgot to file my previous year US taxes. What do I do now?
So, it happens where we are unaware of the tax rules and tax requirements, and should we forget to file our US tax returns because we're unaware of the tax rules, what the government of the United States, the IRS, has done is that they have a program called SFOP, or Streamlined Foreign Offshore Procedures, whereby they require us to file 4 years of consecutive tax returns and FBARs, and we go in and file those and basically get you guys caught up so that going forward you're able to go in and file regularly. So you're not penalized on that, and perhaps there's no tax penalties on it, but you're required to make the filings as needed.
Awesome. Some more questions coming in. So for those of you that recently joined, again, this is RMI's live quarterly one-on-one. And today we are focused around some questions around the US taxation specifically. But again, if you have any questions, feel free to throw them out there and we'll make sure we're answering them. So another question came in: if I have a rental property in the US, do I need to report that in Canada? And the answer to that is yes, if you are a resident of Canada. And so wherever you are a resident, you're typically required to report worldwide income. So if you have a rental property in the US, what typically will happen is you'll get taxed in the US on that, and then any taxes you've paid in the US, you'll be able to claim as a foreign tax credit in Canada, but you are still required to report that. So the tax treaty does allow for a prevention of double taxation, but typically what happens is you end up paying the tax rate of the higher tax rate of the two countries. So a lot of times there is a small disadvantage there because if you are living in Canada and the US tax rate might be lower, you're still going to get hit with some additional taxes on that rental property. But one of the big benefits is having a rental property in the States. You may be able to claim some extra expenses. For instance, if you have a property in Phoenix and you go and visit it once a year to make sure your taxes are up to date, make sure the property is still standing and hasn't been burned down, then you can claim a portion of that trip as an expense for yourself against the rental property. So another question, if I live in Canada but work in the US, how is it going to impact my tax return? And so again, if you live in Canada, it really depends on how you are set up for work in the US. But for instance, if you're living in Canada, a situation we've seen, and you're earning income in Canada and you're working for a US-based company, sometimes they may be registered in Canada. So in that case, they will still issue you a T4. No impact there, you get treated as a regular Canadian. If you're working for a US company as a subcontractor, for instance, then what will happen is you still claim your income here as an independent contractor. Or the third situation might be where you're working for a US-based company remotely and they're paying you in US dollars, treating you as a US employee, in which case you'll need to file a return in both US and Canada to make sure your filings are up to date, and the same tax treaty rules will still apply across the board. Perfect, so I see a couple more questions. We'll get caught up here as more come in, but feel free to keep sending them. If I work remotely in Canada for that's the question I just answered. So I moved to Canada from US in 2022. I was employed in the States and I'm employed in Canada. What returns do I need to file for 2022? Would you like to take this one?
Absolutely. So I'm just going to reread this just to get a refresher on that. It says, I moved to Canada from US in 2022. I was employed in the States and I'm employed in Canada. What returns do I need to file for 2022? So as you've moved away from Canada and entered into the US, you're going to be filing a partial return in Canada and a partial year return in the US as well. And that would be declaring the income in both countries, and the treaty rules would apply across as well.
Yeah, and typically when you do move, you'll do a part year return. So moving from the US to Canada, let's say it happened on July 1st, you'd file a return with your income in the US from January to June, and then you move to Canada, you'll file one for your income for July to December, and say that in the US you're saying you are leaving the country, in Canada you're saying I'm arriving to the country. So there is one additional tax filing you got to do, but otherwise it's a fairly straightforward process. Another question here, can I claim stimulus payments for 2020 and 2021 if I am a dual citizen? I believe the stimulus payments are in regards to some of the COVID benefits that came in. And would you like to tackle this on the US side?
Yeah, so stimulus payments with regards to the US side it's not a taxable income pretty much for yourself. It is government income that has been given out just to support during the great pandemic that we had. So as such, the stimulus payment does not need to be reported as part of a taxable income in the US.
Perfect. And so, yeah, any income, there were specific rules around those COVID payments, and some were taxable, some were not. So it's important to make sure you're double checking with an accountant and a professional on that side. So I have a company in Canada but would like to expand to the US. Do I have to create a new company in the US, or can I operate under the Canadian one? That's a great, complicated question. And as I always say, my favorite answer as an accountant, and many accountants I'm sure will agree with me, the answer is always it depends. And so I'll touch on this a little bit, but if you have a company in Canada that's starting to do US operations, you can, the typical requirements are you need to get an EIN in the States. So your Canadian company can do that, and therefore you're just operating under Canada as one entity. And it's simple in terms of your filings, but that typically will work as long as you don't have a physical presence in the US. And by that, if you have employees down there, if you have any representation, so sometimes it could be a sales rep on the ground, or if you've got product in the US and you've got a warehouse you're renting, or maybe you own an office down there and you got office staff, then you do need to have a US entity in place. There's a lot of different ways to get creative with your structures between Canada and the US. So for sure, reach out to us or reach out to another professional that can help you set that up properly. But it is very possible to have your Canadian company own a US company, and then you do your US operations under that as well. Or like I said, there is a way to make it so you can use your Canadian one. Just really depends on what you're doing. Our most common stuff we see is people with online businesses and they want to expand to the US. A Canadian entity can do that and you're reporting everything in Canada, no issues. Another common one we see is real estate, where somebody wants to buy property in the States, and that I'd say is different because you own a physical asset down in the States. In that situation, you'd probably want to look and say, okay, we need to have a US entity that will actually own the foreign property. So lots of different examples and lots of different options. So another good question here, I own shares in US corporations personally. Do I have to file a US tax return? If you are not a US citizen, then typically you will not need to file a US tax return. And the reason for that is your US investments typically will get taxed with foreign tax credits, and you can claim those foreign tax credits in Canada. And more likely than not, you'll get a full credit back, and so you're not getting double taxed on any of that income. If you do hold those inside of a TFSA, for example, then you may want to look at doing something differently, because there is a potential where the US will withhold some foreign tax credits on you that you're not going to be able to utilize in Canada. So there is some nuances and some complications that you do want to look at for sure if you do have them. But if you own it personally in a non-registered account, you don't have any issues and you do not need to file a US tax return as long as you're not a US citizen. Can I claim the foreign income exclusion and foreign tax credit on my US return? Yes, I think that applies again to the foreign tax credit. So as I had mentioned earlier, if you work in Canada and you're a US citizen and you're employed and you're getting your taxes deducted, then you would end up claiming that as a tax credit on your US return, and that will typically eliminate any taxes that you may own. So pretty straightforward on that side, I think. And then a lot of times the US return, it scares a lot of people. There are some complications around it, but if you set it up properly, it's just more of a reporting element that we have to report to the US, say that your things have been filed, but in reality, you shouldn't be in a position where you owe any tax dollars. Again, always do this, be proactive in this nature. To make sure that can be your situation as well. I want to incorporate a company in the US. Where do I start? Rain, would you like to take that one?
Absolutely. Should you want to incorporate a company in the US, where do you start? Well, you call us first, but nonetheless, we start by reaching out and pretty much getting the right structure. It is so important to get the right structure in place and do some tax planning to understand exactly what we're looking at. There are various forms of companies that we can have in the US, starting from C corporations to S corporations to LLCs to partnerships, so on and so forth. So whatever would be the best structure based on your your taxable income and what you're doing would be the best way to set that up, and that's where we would start. Once that is done, we would get you incorporated in the best state that is suited for your plans and your company and the projections and the things that you want to do with your company. And once that is done, we would go ahead and get you an EIN number. An EIN number essentially is a business number which identifies your company with the IRS, and we use that to do any sort of tax filings in the United States, whether it's the federal filing or the state filing, and we do all of those based on that EIN number.
Awesome, thanks Noreen, and you answered the next question in there too, so that's perfect. And so for those of you that just recently joined, again, this is our RMI quarterly one-on-one question and answer. Today I'm joined with Naurin here, who's our US tax partner, and it has a bit more of a US tax focused, but in the past we've done other topics around cryptocurrency or any general questions. Whatever questions you might have, Canada, US related, feel free to post them in here. We'll be happy to get to them and answer those for you. If I move to Canada from the US for only part of the year, how does that impact my return? I believe Naurin had touched on that earlier, but the biggest piece is when you are in a country for part of the year, you need to file for that year. So for example, if you're in the States at the beginning of 2022, you'd file a part year for the time period you were there, and then we would notify the IRS on that tax return that you have moved countries and have left the US. And then in Canada, what we do is file a return for you for part of the year that you were here, and we would do the same thing and let the government of Canada know that you're here, you're now a resident of Canada, and you'll be filing in Canada going forward. Awesome. So let's see if there's any more questions that come in. Anybody that does have questions, feel free to post them here. More than happy to get to them. It's and for those of you, I see some people have recently started following us. Always reach out to us. You can join our quarterly newsletter. We love to put different tips and information of what we see happening out there in the accounting world and the small business community and small business world as well. And of course, make sure you join us for our quarterly lives, one-on-ones. We do them on a quarterly basis. This one, like I said, has a bit of a US feel to it, but we will answer any questions and for sure visit our past one-on-one lives that we've done, because we've had some really good topics in the past as well. So some of the other questions, I see there's not too many more trickling in. So one of the other big questions I wanted to touch on today was e-commerce, and we've talked a little bit about e-commerce in the past, but for Canadians, e-commerce is a great opportunity, and the reason why a lot of people see it as a great opportunity is because it's an easy way to access the US market. And of course, you know that if you're the US market is more than 10 times the size of the Canadian market, and so that's where some opportunities do arise. So we see a lot of companies come to us asking us about, how do I set up my structure? I've got an Amazon store, I've got a Shopify store, I'm selling in the US, do I need to incorporate in the US? And the biggest thing when you're setting up an e-commerce platform and an e-commerce store, it really depends where your focus is going to be for selling. Are you shipping yourself? Are you using something like FBA Fulfillment by Amazon and actually going and sending products to them directly? So there is a good structure, and there are some good structures you can set up. A lot of times you can set up those companies in Canada, have them operating and selling to the US, avoid any tax complications from that standpoint. But you want to look at what you're doing, where the products are coming from, and look at your overall structure to set those up properly. So a good opportunity for individuals in the e-commerce space. Feel free to reach out to us or another tax professional, but make sure you're getting those structures set up properly. And as I'm on that topic, before I answer the next question here, one of the other really key things to keep in mind when you are selling online, so Amazon, Walmart, any of the platforms that are platforms where they're selling for you, you need to be careful of your state taxes. And so what happens, I may be registered on Amazon.com, and I'm selling a product to, let's say, Florida. Well, Florida has state tax, and when that applies, what we need to be careful of is there are different mechanisms where you can avoid having to charge that state tax and avoid paying state tax if you're buying products down in the States. So there are different tax exemptions you can apply for in advance, especially being a non-resident company in the US if you are being a Canadian entity. So for sure, make sure you ask about that when setting up an e-commerce platform. So I do see more questions coming in, so let's touch on some of these here. Our family owns a vacation home in the US for personal use. Do we have to file a US tax return? What if we want to rent it out, and what happens when we sell it? So big one there, if you're not, under the assumption you're not a US citizen and you only have a vacation property, because you're not earning income on it, there's no requirement to file. But when you want to rent it out and when you want to sell it, there would be income that's earned, right? Either through rental income or potential capital gains. And anytime you have rental in the US, citizen or non-citizen, you will need to file at that time. So on a day-to-day, if you just have a vacation home and you're not doing anything else with it, you're okay. But if you start to use it and earn some sort of income, then there is, of course, filing requirements down in the States. When do I need to file an FBAR? Would you like to take this one, Marie?
Absolutely. An FBAR is basically providing information with regards to your bank accounts that are located outside of the United States. And this information needs to be filed with the IRS every year with your tax returns, and the filing deadlines are very similar to the filing deadlines of the tax returns on an annual basis.
Awesome. FBAR is a funny one because I get a lot of clients reaching out to us and they're always like, do I have to file this FBAR? And it's such a headache, and unfortunately it is. It asks for every bank account you have, every like so much information on your financial side, and they want to know your highest balance in the year, and you need to go through your statements to identify it. And it is a little bit of a headache, but again, when you can set up the right system and be more proactive in nature, the process can become very easy along the way. So what is the benefit of working with a cross-border account? What can you guys help me with? Would you like to answer this one?
Yeah, for sure. Well, the benefit of working with a cross-border accountant is you get to talk to us to begin with. That being said, what we can help you guys with is the fact that we ensure that the US-Canada cross-border treaty is accounted for appropriately and taken into consideration accordingly. The another advantage is tax planning and tax structuring. Depending on what your structure is, what your plans are, what you want to do personally, and if you need a corporation, a correct structure is quite important to ensure that we're not being double taxed in both countries or in either of the countries. Another advantage is to ensure that when we're looking at foreign tax credits, the application of that is appropriately used in either Canada or the United States, depending on which country we're looking at getting the credits accounted in. So those are the few benefits of working with a cross-border taxation accountant.
Yeah, and I think the really big thing that Naurin mentioned there is your structure. If you set up your structure right, that's going to be instrumental in making sure you're saving on tax dollars. So really you want to make sure you're talking to somebody who understands both sides of the borders anytime you're doing business in both countries. So there is a lot of benefits on that end. For those of you that just joined, I see a couple more people. Welcome. It's the RMI quarterly one-on-one question and answer live with myself, Irfanali Moledina, managing partner, and today I'm joined with our special guest Naurin Moledina, who's our U.S. tax partner. So I won the Mega Million Lotto in the U.S. I'm rich. Great, send some this way. Do I have to pay taxes? And so this is actually an interesting one that I'll expand on a bit more. There are some specific things in the US that you get taxed on that you don't in Canada, and lotto winnings is one of them. So a lot of times up here in Canada, you'll be like, oh my goodness, they've got $1 billion lotto that's going on in the States, and that's insane. And in reality, yes, it is insane, but what happens is up to half of that can get taxed in the States on lotto winnings. So in the US, lotto winnings, gambling winnings are taxable. In Canada, they are not, which is really interesting. And along those lines, gifts in the US can be taxed depending on certain limits, and in Canada, they're not. So, for instance, there's a lot of times where a parent might gift the down payment of a property to their child. In that situation in Canada, you wouldn't pay tax, but in the US, that actually gets taxed to the child's tax return. So there are certain limits, of course, that do exist in place on that, but it's something that's just one of those nuances that keeps everything between the two countries different. So again, thank you for everybody that did join us today, and it was Irfanali and Naurin. from RMI Professional Corporation. We did our quarterly live one-on-one question and answer. Today was very US heavy focused, but of course, anytime anybody has questions, feel free to reach out to our firm and we'll be happy to answer them. Canada, US related, or even just general wanting to chat about the state of the economy, small business opportunities, and structuring along the way. So thank you for everybody that joined today. I hope you guys can go back and visit this. You can obviously visit the recording of the session. Feel free to take a look at our previous ones as well. And we look forward to talking to you soon. Take care.
Thank you.